Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, September the 15th, 2017. It is quad witching. We have options expiration and we have futures expiration today, so should be an interesting day. Keep aware of that. We'll talk about that a little bit more. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place for whatever the auction may throw at us. We do not know what the market's going to do. We could look at what the natural course of the auction could be and have a plan in place for each scenario. That way, we just have to wait for the market to show us and then execute the plan that best suits the market, not what suits us. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to in the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okie dokie. So let's start with yesterday. Oh, where did I put the picture? So yesterday, we were looking for a rotational day, possible breakout day in this balance area, but basically we have just come up and accepted this price, this value here around the 93.75, and I'll show you on the daily. We actually have a potential rising 3 pattern on the daily full session, but we opened auction out of in range. We failed to break out. We rotated up into a new all-time high at 24.96 and a quarter, broke that triple top at 95.50, and then they basically came right back in balance and we went sideways all day, creating another P-shape profile, but very high kurtosis around that 93.75. If you take a look at it on the bigger picture, you can see that we've got a gap up, a gap and go, and what could be a basing pattern for another move up to new all-time highs, or it could set up a island top. It doesn't look like it. I was thinking maybe if we came down on the news. Notice that the overnight low was right here at the 24.87. This is our key line in the sand. This closes the range gap and will likely give us a rotation back to where this started, which is back at 85.50. Because when we started this move up, the microcomposite VPOC was down here at 85.50, and then it shifted up to 93, and now it shifted slightly higher up to 93.75. So value is coming up, and we're accepting price higher. But right now, off of the news, we've come down a bit and testing the lower part of this value area. The value area low is 24.8975. That is going to be our warning line for a possible move back to test the overnight low down at 87. But let's not get ahead of ourselves. We've got lots to talk about. Let's talk about Max Payne. It is quad witching, so whenever we get to quad witching and options expiration, I like to see where the Max Payne is for the puts and the calls, and that is right at the 250.75 area. So between 250 and 251. If you look at the SPY, come on. If you look at the SPY, we're trading right now at 248.62. Likely see a move down to test the lower side, but then a rotation back up towards that max pain up all the way up here. I don't think we're going to get there based on how it's trading, but it is a possibility that they take it closer to the 24.50 or the 250 on the SPY. Take a look at the macro to micro. I like to start my day using my paper money to look at the candlesticks and the 9 EMA, the 20 SMA, and want to see where we are within the time frames, starting from a monthly perspective and working my way down. See if we got good slope and good separation. If the trend is being challenged or violated, you can see on the monthly, this is just very. This is 1, 2, 3, 4, 5. We're on our 5th month of positive gains, and that's a very strong trend. Going to the weekly, you can see that after coming down after that Mr. Sneaky that we talked about on the Monday of this week, that we challenged the 20 but did not break it, and we're back above the 9 and the 20 and getting the continuation pattern on the weekly. On the daily, this is where we have a possible rising 3 pattern. So a rising 3 pattern is a 5 candlestick pattern where you get a large green bar, then you get 3. You can get 4 as well, red bars that come down, and then the 5th bar will be another large green bar, and this is a continuation pattern. Now we're only on the 3rd bar, so this could be a negative bar, and usually you're looking for on a rising tree the 5th candle to start down below the 3 bearish candles. So this is setting up. It's probably not going to set up today, but it could set up on Monday and Tuesday for a continuation pattern, and we'll watch on Monday for it to happen. But it is a possibility. We do have a technical gap here on the daily, so that also coincides with the possibility of the move down to come down and then get the breakout candle on Monday or Tuesday. But the pattern itself is still very strong to the upside, and the trend is very much intact. As we move down into the intraday, you can see that we're coming into consolidation on the intraday, and building compression for a move, whichever way it's going to be. On the 1 hour, you can see the same thing, but we're seeing some weakness in the possibility of a start of a downward trend on the intraday. That confirms again on the 30-minute, on the 15-minute, and on the 5-minute. So you can see that we're getting acceleration to the downside. So I am looking for sellers to start the day off. This is a key level down here. You can see at the 24.90. That's where the buyers have been stepping in the European session. And if we break that, we could get a bigger move down towards that key line in the sand at 87. So take a look at the news. We had core retail sales and New York Empire State Manufacturing. It was kind of a mixed bag. Wasn't very good in terms of retail. Not bad on the state manufacturing index. We've got 19 minutes before capacity utilization and industrial production and manufacturing production numbers. And then at 10 o'clock, we've got business inventories, the Michigan inflation expectations and consumer expectations and consumer sentiment. And then basically there's not a lot more until 1 o'clock. where we've got the Baker Hughes rig count. And so that's our news for the day. Now, I'm not up to what's going on in terms of the missile because I've been off I missed my long and look at it run on gold. Should have just taken the late entry. So apparently there's something to do with the missile crisis. Does somebody want to just mic up for a second and tell me what's going on?
There was just a test that they did, another one over Japan, and it ended up in the Pacific Ocean. It was a test, so not a big deal.
Okay. So in terms of key levels to watch, obviously the 2490 is key because that is the value area low and going to be our warning line. The 87 is going to be our key line in the sand. Anything below 87, target that 85 area. It's going to be very important. It's going to be 85 is actually our weekly critical mass as well. But we'll get into that in just a minute. So let me just do this. Let me get this out of the way. Take a look at the Globex. You can see that the Globex is pretty much 100% net short in time and price. We've got a Globex VPOC at 91 and a quarter, and we're just trading right around. Again, we keep getting this boxy areas on the profile, where they're accepting price. So you see how every area here, it's really boxy. Can I bring them all to the front here? Let me see if I can do that. Yeah, you see, look at this box. Then we've got a 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 box. They're just, once they're finding the value for the session, they're really putting off a lot of contracts, okay, within a range around that price. But inventory is basically net short. So anything above the value area from yesterday at value area high at 94.75 is going to put a lot of traders deep in the hole, short, and they may get squeezed, and we may see another new all-time high. Remember that our inverted cup and handle first target on that 4-hour chart pattern that we were looking at last week, or was beginning of this week. I think it was beginning of this week or end of last week. That first target is 24.97. So we missed it by 3 ticks so far on that inverted cup and handle. And let me just grab that so we can just show it one more time. Here it is right here. This is the right one, I believe. Yeah. So there's the first target right there. Right there at 96.90, 24.97. And then the primary target 25.10.74. And we're holding above the neckline. So this is still a very, very interesting pattern that I would pay very close attention to, hitting those levels. I think, the fact that we're holding in the 90s, so strong that we will see the 2500s. Whether we see them today or whether we get that bit of a pullback that I'm looking for is going to be the real question. So start moving our numbers over for the night. Our overnight high is 94.75, right at that value area high from yesterday. Our overnight low is right at the key line in the sand at 87. Our VPOC could shift, but right now is 91 and a quarter. And then we've got an LVN right here at 90, but I'm paying attention to the 90 because of the fact that is the value area low and of the 4-day microcomposite. mean, if you wanted to, you could take this this breakout day. Whoops. This breakout day right here, you can take that right out of the equation. It's not gonna change much. The value area will shift slightly, but I still like the 90 area, so that's going to be my warning line. All right, and then obviously the value area high and the overnight high is going to be a significant trade level for us, targeting the overnight high, or the all-time high, I should say. And those are really the levels that I have to put in. Nothing else really changes. So in terms of hypotheses, we're going to be opening auction in range. Again, I'm watching and paying close attention to this falling 3 pattern. Let's put the daily ATR. First of all, our week open is 2467.75. Our daily ATR is running at 1730. So our weekly critical mass, is right here at the 2485, and that's a key area because it's got the CHVN, the naked close, the naked VPOC just above it, and we're below that key line in the sand at 87. The ATR upside target for the day, 87 plus the 1730, 2504 and a quarter. So still have range capabilities to get into the 2500s, and to the low side off of 94.75. $77.50. So these don't change very much. So in terms of hypotheses for the day, I'm looking for an open auction, out of range, or sorry, in range. I'm looking for responsive buying up into the 90s, 2 to 94. Then I'm looking for a rotation down to test the overnight low, come down and test this 85 and close the gap. Find a base and rotate back up and close somewhere in around the 90-91. Sounds a lot like yesterday, doesn't it? Hypo 2, which I give equal weight because of how we're trading right now, is an open auction out of in range, a breakdown to the 85, possibly even to the 80 level, but somewhere down here in the 85 to 83 maybe, possibly 80-50, the 50% of the significant breakout candle, basing and rotating up and closing somewhere up here again in the 91 to 93 area, more likely the 93. So basically, it's just about another balancing day with which way takes control first. Basically, that's the main hypo. The third hypothesis is an open auction, failure to get into the prior day range, a immediate move down into the 87, 85, go sideways, then fail, and come down here, and come back down towards these gaps down here, down in the 74 and 72 area. Hypo 4 is an open auction, false breakout, rotate back up into the 93, base here, and then push into the 2500s and test the 2500s, but closing back in the 2490s. Those are my main hypotheses for the day. Looking at gold, I was looking for that basing pattern, and I was trying to get long at the 28 area, and I missed it because I was getting ready for here, but I was looking for a rotation back up into the 1330. We're basically probably going to chop around here today between the 25 and the 36. Today's the day to watch the value area for the microcomposite. Below the 25s, look for them to go and test that 19 level, or actually 1840. If they get above the value area high at 36, look for them to come up and test this 42 to 43 area. Other than that, look for them to chop around in a $5 and $6 rotation, just going sideways most of the day on gold. Anyway, that's a little bit longer session than normal, but had lots to cover. As always, trade well, trade safe, and we'll catch you on the flip side.